Star Daily with Phil C.
A little bit of a different video for you today. The FOMC was kind to us in the Star Live trading room and we gained about 210 pips. So for those of you who trade standard lots, that's 2,100 profit overnight. Not bad, taking advantage of the volatility in the markets. Now I want to go through how that's possible and how you can do the same. But first, I want to share with you, who's become part of the private client group now, what we talked about, trying to trade fundamental news. Before this guy came to me about a week ago, he was quite frustrated with how to approach trading to get a desired result. Most, if not everyone I talk to, are quite annoyed, pissed off, and they've had enough. They have every right to be fair, because of the nonsense pushed online with trading. So I don't lose you, I'll get straight to the point, and that's if you are a retail trader trying to make trading work for you to generate profits, because that is why you are here, let's not kid ourselves, and you're trying to use fundamentals to dictate your decisions to buy or sell, I'm going to tell you straight up, you will lose. See, trading fundamentals is virtually impossible to profit from consistently. Over the past 7 years of working with traders around the world, this is the problem we face with fundamentals. You have to guess what the expected figures will be. Then you have to guess how the market is going to react to that. As I shared with the guy that I was talking to, as a retail trader, that's not the best use of our time. The underlined point I want to make is this: to have any probability that you are going to make money trading the news is by ignoring the news itself. What do I mean by that? Exactly what I just said. We follow a proprietary method called STAR, STAR. It's an acronym for strategy, test, analyze, and results. If you want the secret to trading, here it is in bullet point form. First, you learn a particular strategy that you like. Not many. Just focus on one strategy where you can identify that without subjectivity. If this happens, then I do this. So if we have a new high or a new low followed by a pullback, then we're going to buy or sell. Simple as that. Identify that consistently. Next, you want to test that strategy. This is the non-sexy part of trading. We go back in history, say 2019, and go bar by bar through the markets. Identify your strategy. When you see it, document and journal that trade in a spreadsheet. After that, you want to analyze your data. Now, what you are looking for is a positive expectancy, a PE above 0. All that means is a mathematical proven probability that you will gain more than you lose with said strategy. So I want you to take on board what I'm about to say. I need your undivided attention here. Because if you don't understand this, I guarantee you with absolute certainty, you'll never ever become a consistently profitable trader. If you have a PE above 0, you have a winning system. If you have a PE below 0, you have a losing system. Now, if I know my demographic audience, most if not all of you, don't know what you were trading actually gives you an edge. By analyzing your data with this formula, you will know. I can hear the voices in the background saying, yes, Phil, that's great, but past performance is not indicative of future events. Well, I'm going to counter you with this. The professional retail traders, hedge funds, prop firms follow the same streamlined approach that I'm sharing with you right now. And they've done so for decades. It's the only measuring stick we have. And when you start doing it for yourself, I promise you, you'll be pleasantly surprised and it will turn your entire trading around. That's STAR. Now, R is results. After you've analyzed your data and you have an edge, now it's time to take that trade plan and then go trade it live. This way, you are getting positive results for your efforts. A bonus tip is to match your live trading results to your tested results. Minimize your errors over time, fine-tune it, and you'll come out of the boom or bust phase and arrive at being a consistently profitable trader. So let's walk through it again but on the charts with the trades that we took in the Star Live trading room. If you haven't done so already, please hit the like button if you find any of this valuable, and subscribe if you like my style. It helps me out tremendously, and I'd be truly grateful for you doing so. All right, let's go to the charts and see how it all comes together. All right. Now, this trade was taken in the live trading room. I think I also touched on this with the Star Trading Overview video that I released. And what we're looking at here is euro dollar on the 4-hour time frame. Now, I've been watching and waiting for an opportunity to get involved in this. What's happened here is price action has come all the way up into a sell zone that I was paying attention to, and our stop was above our swing high here. Now, why was our stop above this swing high? Well, this is a valid trend continuation trade. As we are creating new lows, so we have a new structure low here, I take my previous high, and then what I'm looking for is a pullback back up into this zone, into this structure level, and then I'm looking to execute a short, right? So we get short here. Stops are above the swing high right there, as per my rules to get involved in this trade. As you can see with the FOMC, the fundamental news that has happened, the volatility here, we've got a pop right up into my limit order. Okay, so this happened overnight while I was resting, right? This happened overnight. So this was daytime in New York for you guys. Now I'm asleep when this happens. So as price action comes up and hits my limit order, I know that one or two things is going to happen from here. It's either going to hit my stop or hit my target. That's it. So my original thesis was done. We analyzed this inside the live room, and then we got short here as FOMC pushed up into that level. Okay. Now, what does this have to do with an edge? What does this have to do with a positive expectancy? Well, every time that this behavior happens, because what you need to understand here is each one of these candles or the movements that are going on in front of you is a visual representation of all market participants, right? And what we're trying to do here is look for certain patterns and look for certain behaviors. And if we can spot those and we notice them happening over and over, we can create certain rule sets around it, certain conditions, and then take that strategy and then go and test it. So we can take the trend continuation trade strategy, this one here, so we sell here, stops above the swing high and targets at a retest of the low. Okay, those are my three conditions. When that criteria is met, we sell the market because we're bearish. The same happens in reverse too. If we're bullish, we would buy the market in the same way. Now, the positive expectancy comes about when you were testing this. So we test that behavior over 100 to 200 trades on the euro dollar on the 4-hour time frame. That's what we do. We test this without any subjectivity. Okay, it either does this. That's what we're focused on. If price action creates a new structure low, then we wait for a pullback in the structure. If we get a pullback back up in the structure, then we sell. Okay, stops here, entry here, stops here, targets are here. Now, every time we put the trade on, a minimum of 1-to-1 to target 1. Every time we get a minimum risk to reward to target 1, we want to take that trade. And that's the same way that I've tested. Now, when I analyze my data, so we got the strategy and we test it. Now, when I analyze it, after we analyze the data, we know that the spreadsheet would tell us that we have a positive expectancy. So now we have an edge in the markets. So we continue to trade this live, which is R, the results, STAR. So when we're trading this live, we know, we have the belief that we have an edge trading this behavior. The market participants creating these patterns for us. And then you match your live testing, you match your live trading against your tested. And you continue to do this and fine tune and keep the process going. Now, if you're disciplined in keeping that process going and you're coming into the markets every day and you're trading live, right? And you match that against your back-tested data and you trade the exact same way, then you have a mathematical probability of being right, of gaining more than you lose. Again, we only have to be half right on this because of our positive risk to reward profile. We have a minimum of 1-to-1 with target 1, right? So if we're half right on this and we've got this risk to reward here for target 1 and this risk to reward for target 2, it doesn't take a genius to know that trading this over time will generate profits for you. But again, your tested results will tell you that. So if you haven't done this, if you haven't done this step and you're trading live right now, I guarantee you're consistently losing money. Because you haven't put in the work in the testing phase to know that what you were trading actually gives you an edge or not, that what you were trading actually works and giving you positive results, which are profitable results. So that's using the live trade right here is an example of following the STAR and being half right with a good positive risk to reward. Continue trading that every day and you will make profits. So that's euro-dollar 4-hour time frame. What we've done is as we've come down and we hit target 1, we trade 2 contracts. We take off half of this position, roll stops to break even. Now I'm looking for an extended move down into a Fibonacci extension at the 127 and see if we can get there down here. That would be about 130 pips, so it'd be about $260 trading 2 pips per position. Okay, so a successful trend continuation trade right there. Again, half right on these. This is the risk reward that we want. Then we stay disciplined, come into the markets every day and continue trading that to be profitable. So pound dollar, I didn't get involved here. Okay, so I missed this one. To be honest, I forgot about it. So I missed this one, but the same thing is meant to happen on the euro dollar. Okay, that's called human error, right? It happens to the best of us, happens to all of us. But we got the direction, okay? So trend continuation trade, the same setup from the euro dollar, but on the pound dollar this time on a 1-hour time frame. If we get, so we take this off, if we get a move, so we get a move down here, if we get a close below this low, which we do, we get a break and close below. That gives us a new structure low right here, okay? Now, the next step is if we get a pullback back up into this level right here, okay, so back up into structure, then we're looking for a sell. So stops would be above our previous swing high, because if price action does push higher, we want to get out of the trade, similar to the dollar CAD that I did on the STO, got that one wrong, right? So if price action comes all the way up, and then we close above this, we want to get out of it. Because as you can see from the dollar CAD example, if we pull back, we're most likely going to get an extended move higher. So we want to be out of the trade here, not up at here. Right? Want to preserve your capital. So that's the significance of a stop placement. As price action puts in a pullback here, we want to sell at structure with stops above our previous high, and then targets at a retest of the lows here. And then of course, target 2, always a Fibonacci extension, back up in, and look at that. We get price action coming all the way down into a 127. So that would be target 2 in this case. So that's pound dollar trend continuation trade there. Over on the Aussie dollar, another really good trade here from the Star Live trading room. We came up into an 886 right here. So this is a valid bat pattern. We came up into the 886, and this is during the FOMC. Ignore the news, trade the plan. That's what we're doing. A strategy for us, all the conditions were met. So the criteria here is a valid bearish bat pattern. And then if we get a move all the way up into 886, then we sell, which we did. Price action came all the way down during the fundamental news, came all the way down into target 1, right there. Then not long after that, we came down into a 618 into target 2. So really nice trade there. 45 pips on target 1 and 80, let's say 80 pips on target 2. Again, a really nice trade here. But was I concerned with the FOMC at all? No. Why? Because I haven't tested that. So if the opportunity is set up for me and I choose to stay out, then I'm going to skew my results. Does that make sense? Because we want to match our live trading against our back-tested results. That's it. We want to mimic those. We want to mimic those results with our live trading. Because the back testing told us that, hey, if we trade this over and over, then you're going to be profitable. You have an edge. So I need to match that with my live trading. Mimic those profitable results. The news is either going to help me or stop me out. That's it. But I pay no mind to the FOMC. And I continue trading my strategies no matter what. Because I know over the entire year of trading that I'm half right with a good positive risk to reward on the strategies that I take in the live room. And the private client group can see that. That's one of the benefits of being part of what we do here. You get to see all of this used in a live market environment, executing these strategies every single day. So you can see the loss streaks and the win streaks and the consistency over time. That's one of the benefits being involved in the Star Live trading room. All right. Using all the education material that's available to you in there that made me a consistently profitable trader. Using it, live streaming every day, London market open, and we continue trading the plan. But again, I pay no mind to the FOMC. I continue trading the plan. It's either going to help me or stop me out. That's it. I'm half right on these with a positive risk to reward. I continue trading that with discipline. Daily disciplines practiced daily. Following that process over and over, the attainment of profits for you in trading is inevitable for you. By doing that, you will do incredibly well. Remember the secret to trading. Have a strategy, test it, analyze the data, know that it has a positive expectancy, and then trade it live and get the results. That's it. And the way that we've designed it with STAR, the way that we designed it is the clients go through a foundation series. Takes no longer than 3 months to complete, right? All the stuff that you need to do to begin trading live. Right? So now I want to leave you with a trade that I took right now. I think what is it? On the Kiwi dollar. Okay, right here. So on the Kiwi dollar, we have a live trade. And this is in a trend continuation trade fashion, right? We have our starting point down here, bottom left. We have a move up. We have a pullback. We have another move up. We have a pullback. we have another big move up, and then we have a pullback. Where do we get a pullback into? Right down here. So where are the stops going to be? Below this low. Because if we continue pushing past this, we want to get out of the trade, cutting your losses, because we were wrong. 50-50 right now. But look and pay attention to the risk to reward profile. If we have a coin, heads we win, tails we lose, and we flip it and we're 50-50, so on tails we lose this amount, okay? So this would be about 40 pips. Tails we lose 40 pips, but heads we gain 66 pips. And we flip and we're half right. Again, doesn't take a maths wizard to know that if you do this every day, you will gain profits. That's that's the secret to trading. That's what's required. That's why we designed the streamlined approach into an acronym: strategy, test, analyze, results. By following the steps and going through that, the attainment of what you want out of trading is possible for you. But it requires putting in that little bit of work. Right. Break and close above, we have a pullback, we get long. Now this is a trend continuation trade towards the upside. Okay. So we'll see how this trade plays out on the Kiwi dollar 4-hour time frame. So if we get a move back up into retesting these highs, we do the same thing. It's the same trade management. We take off half of the position, we roll stops to break even, and then we look for a continued move higher. If we do, then we get out at target 2, about 67 pips for target 1, and about 100 pips for target 2. If we get those targets hit, then we immediately sell this pattern right here. As soon as price action comes all the way up into the 127, we take off the second half of our position, excuse me, and then we sell with stops above our highs looking left, right here. Because we'll be involved in the next opportunity, this pattern trade right here. Okay. So that's what we were looking at in the Star Live trading room. And I wanted to put this video together for you just to showcase to you that, hey, look, if you can be half right on your moves with these kind of risk to rewards, and you test that and you know that it gains more than it loses, you're 90% of the way there. I promise you that. All it takes is putting it into a plan and trading that plan every single day, no matter how you feel. Right? And with the news events, such as FOMC, it's either going to hit my targets or stop me out. Because I didn't test the news. Therefore, I don't trade the news. So that's how I use the FOMC to gain profits from my trades, right? We just ignore the news entirely. Now, there are 1,000,001 ways to trade. I'm not saying that that is the only way to trade, right? If you've forward tested and you see certain patterns in your trading and you say, hey, every time I stay out of the news, I'm less likely to lose on this trade, then by all means trade that. But the point is to test that and then trade that which you've tested, period. And if you do that, you will gain profits from your efforts over time. Anyway, what I will leave you with is, if you want to learn how to do the trend continuation trade strategy, I'll leave a link to that below. It's the Star Classroom. You can create a free account there and go through the foundation series. I've also put the 4-part video series in there. The foundation, what that is making day trading a reality for you. So making trading your business, treating it as a business. So go through the 4 videos there called the foundation. And then after that, go through the education and then learn the trend continuation trade strategy. If you want to trade with this kind of positive risk to reward profile, it's there for you. So hit the link, create the account, go through the material. Also, inside the Star Classroom members area, on the bottom right hand side, there's also a live chat. You can reach out to me, ask me any questions, and I'll do anything that I can to help you move closer to you becoming a consistently profitable trader. I'm here to help. All right. So until next time, be safe, enjoy life, and I'll see all the, about 2 hours time, I'll see all the clients inside today's live room. All right. And have a wonderful weekend this weekend. All right. Until next time, be safe, enjoy life. Talk to you soon.